Hello everyone, welcome to Everything Trading. In today's video we will talk about the best and most accurate trading signals that can be used easily, even with another strategy, meaning that you will benefit from the full trading ability when you use them. The first signal in this video is the RSIDivergence signal. To implement it and learn how to use it, let's start from here. This signal can be found on several frames such as 15 minutes, 1 hour and even 4 hours. But to increase the speed of trading, it is recommended to use it on a 15-minute frame, as we will do now. After choosing the time frame, we move to the indicators and search for the RSI indicator. As for the inputs, we leave it at the default settings, which are 14 and close. As we know, this area here is the oversold area, and this one here is the overbought area. When we see that the RSI indicator has reached the oversold area, we look for opportunities to enter into buying positions. And when we see that the RSI has reached the overbought area, we look for short positions. But to find the divergence, we need more than that. First, we have to see that the RSI has reached the oversold area and then headed up, as we can see here and also here. But where's the divergence, and how do we find it? To find out, we will use the replay tool. Let's say we were trading somewhere here. Here, we find that the RSI indicator reached the oversold area and then headed up to the purple area. This movement formed a new bottom, and we will call it number 1. But is that all we need? Note there's more to it. The second condition is to see that the RSI has made a second bottom. To find out, let's run the player. Here, we find that the RSI has moved to the oversold area again. But is this considered another bottom? This is not a bottom unless the RSI returns to the top and crosses the 30 line. Well, let's run it and see what happens. Now we see that the RSI has crossed the 30 line heading up, which created a new low, and we will call it bottom number 2. Now that we've got 2 bottoms, what else do we want? We want to see that the highest top formed between the first and second bottom did not cross the 70 line, meaning that it did not touch the overbought area. And since this top didn't touch or exceed the 70 line, we will consider that the first 3 conditions are met. After we find the first 3 conditions, we mark the candles corresponding to the bottoms that we found. This candle here will be number 2, and this candle will be number 1, as in the RSI indicator. Now we connect the first bottom to the second bottom by using the trend tool. We also connect the first candle to the second, and when we finish, we compare these lines here. We find that the trend we put under the bottoms of the RSI is heading up, while here we find that the trend we put under the candles is heading down. And this means that the divergence has already happened. But the question remains, where do we enter? Do we enter now at this candle, or do we wait a little? To answer this question, we must return to the top that located between the first and the second bottom. I don't mean the top in the candles, but the top in the RSI indicator. Then we use the horizontal line and place it directly above it. Now all we have to do is wait for the breakout. If the RSI indicator breaks this line, we enter it by position. And if it bounces down, it means it was a false signal. To find out more, let's run it and see what happens. We can see the horizontal line has been breached, and this means that the signal has been confirmed. We can enter into a buy position above this candle here, and the result is an excellent rise in the trend. Some may say that the entry should be here when the RSI crosses the 30 line. Well, this method may be correct, but it is very weak, and the candles may go down most of the time, especially without using other indicators. As for the method we talked about, it is really powerful and successful most of the time. Now on to the second signal in this video. The Bollinger Band squeeze signal. This signal can be found even on small frames, such as 5 minutes, and it can also be found on the 15-minute and 1-hour frame. As for the indicators, we will use one indicator, which is the Bollinger Band's indicator. This signal is really easy to find. As soon as we see that the lower and upper bands are close to each other, and we see that the candle suffocation between the bands more and more, we know that there are squeezes in this area. To be sure, use the measure tool from here, and you will find that the aspect ratio from the lower band to the upper band will not exceed 1%. And after you find it, there are 2 conditions. The first condition is to find the highest top in this area, which is this top here. And then to make sure that it is a top, we have to see that there is a candle touching the upper band, as well as it must be between 2 lows. And to make sure they're really lows, they should touch the lower band as well. Now, after determining the highest candle or the highest wick at this top, we will draw the trend line in a very weird way. We will draw it from right to left, passing through the highest top we found, which is this one here, and then continue until we reach any previous stop. Finally, all we have to do is wait for the breakout. And when the breakout occurs, we enter into a buy position. The third signal in this video is the exponential moving average signal. This signal can be found on several frames, such as 5 minutes, 15 minutes, and even 1 hour. To find the signal, we will use one indicator, which is exponential moving average. In the search field, type EMA and choose this indicator under the technical section here. As for the settings, it should be set to 400. Now let's find out how to find these signals. Let's say we were trading somewhere here. To find these signals, we need to see two things. The first thing is to see that the candles have crossed the EMA line from bottom to top, as it happens here, and we will mark it with a vertical line. The second thing is to see that these candles have returned after a while to the bottom and crossed the EMA line from top to bottom. To confirm this condition, we must see that there is a red candle that is closed with its entire body below the EMA line. Then we put a vertical line here too. In this way, we have trapped the candles between two lines. The line in which the candles crossed up and the line in which they crossed down. After restricting the candles to a certain area, we determine the highest top. And I think that's very easy. This top here will be the highest one. Now we take the trend tool and we put the trend line as we said. If the trend line is breached above the EMA line, we will enter. But if it occurs below it, this is considered a weak breakout. Now, we start running and see where the trend line will be broken. As we can see here, now at this candle, the breakout has taken place, and it is also above the EMA line. This means that it is a positive breakout and we can use it to enter into a buying position. Even in these confined spaces, we can look for these signals. Here we put the vertical line because the candles crossed the EMA line from below and then headed up. Do not use candle wicks to determine if the line is crossed. Just look for fuller closed candles. And here, since we have a red candle that closes below the EMA line, we will place the second line. Finally, we draw the trend line from the highest stop in this area that we have restricted to the last stop located inside this area. And when a breakout of the trend line appears above the EMA line, we enter into a buying position. Let us look at one more example before we end this video. If you like these signals and want to know more about them, choose one of them and type it in the comments section, and I will implement it in a complete strategy in the upcoming videos. Thank you for watching, and don't forget to like and subscribe. Good luck trading.